So I think we will just keep going. And thank you very much. Thank you for joining me. I am really grateful and I do appreciate your time. I will try and move by very quickly. A few of you know me, a couple of you do not know me. So just in case you're seeing me for the first time, welcome. I am Susie. A couple of people know me as Susan. So Susan, Susie, anyone works. And then AKA Wealth with Susie. So you would know Wealth with Susie if you're following me on any of the platforms. So if you're following me on Instagram, Facebook, TikTok, YouTube, all of those, you would find me as Wealth with Susie. And for God's sake, if you're not following me, I don't know why you're here. Please follow me on any of those platforms. Basically, a little about me. So I started my finance journey way back. I actually did study finance. For those that may not know, I studied finance back in the university in Nigeria. And then I worked with Zenith, I worked with Sterling before, of course, I came here. So when I came here, I was very keen to kind of really understand how money works. So of course, back home, a couple of us, you probably would know fixed deposits, treasury bills. Those were the things that will kind of give you more money, right? But when I came here, I was like, okay, fixed deposit, like there's nothing like that. And I was like, okay, so what do I do with my money? How do I know how to save? So I wanted to know where to save. I wanted to know what to do. Like, how can I just be putting my money into my checking account? And of course, the savings account, they told me that it was 1% or 2%, some very crazy amount. And I was just like, okay, I really need to understand what is happening with finances in Canada. So my search led me to, first of all, find out, so I asked a lot of questions and then I was like, okay, so there's actually a way I can study and learn about all these things. So initially my goal was just to get in, understand for myself, understand how money works for myself and make sure that I'm able to use that money and use that knowledge for my family, make sure we're investing right and making our money work for us. But again, as I got in, I wrote the exams, I passed, I became licensed. I was like, okay, it actually looks like a lot of people do not know all these things. A lot of people are just saving money and some of them are just leaving it in their bank account. They don't really know where to put this money and all of that. So I just told myself, you know what, it's important to actually share this knowledge, give people this knowledge and help them to not make the mistakes I made. Because trust me, I made a lot of mistakes when I came. So yeah, that's kind of how eventually I came down, I got into the whole financial thing, and then all of a sudden it's been, all through, it's just been really a very good experience. Okay, so that's a little about me. So I am definitely passionate about building wealth, finances, anything regarding finances, investments. I am licensed across different provinces in Canada. And basically the goal is just to ensure that we make the right decisions regarding our money. Because trust me, you and I did not pack our bags from Nigeria to come here to start everything afresh and not even understand what's going on with our money. It's very important to know that. Okay, so that's a little about me. So today we're going to talk about a few things, and some of these things are things that we may actually know about. Some of them will be things that you might be hearing for the first time. So we'll talk about hidden money leaks in most Canadian households. We're going to talk about that. We're also going to talk about the simple shifts that can actually put hundreds back into your pockets. Like very little things. It's nothing amazing. It's nothing big, like nothing really huge, but just very, very small little mistakes here and there, or things that we're doing that we feel like we ought to be doing, or things that we're doing that we can do better. And then, of course, how to maximize tax sheltered accounts. A lot of people are not aware about this. And then the smart way to actually protect that income. All right, so what does losing money mean? What does losing money mean? And before we go into what this means, we want to really make sure that we make it very clear. A lot of people kind of attribute losing money to the very big things. And I just want to set the stage very clear here that yes, the big things are there, but the focus for today is more, what are those tiny things? What are those little things we can do here and there that can actually change the trajectory of what we're doing and help our finances grow better? So you'll see that it's not just losing money is not just bad investments. It's not just market crash. It's not that just, oh, I got scammed. Like those are good things. Those are like a lot of things that happen to people, but that's not the focus for today. The focus for today is more in terms of how people lose money through the smaller ways. It's true, like, for example, high interest debt, taxes you could have reduced, bank fees, poor financial structure, or lack of income protection. Like these are little things that a lot of people just assume and think, oh, you know what, this thing, it's not a big deal. But trust me, by the time you calculate by 12 months, you would see that it's actually way more than what it looks like. So that's kind of the focus for today. Now, before we delve into what exactly we're discussing, it's also very important to clarify what exactly losing money is, because some people believe, oh, everything that comes out from their pockets is they've lost money. It's not correct though. There are some things that are basic that You see, no, you know what? Whether you like it or not, these things are basic and these things are not, is not really losing money. And the first on the list is spending on essentials, right? Essentials, you're talking of your basic essentials, food, clothing, shelter. Like, you're not losing money by spending because, of course, you have to eat. You have to live somewhere. You don't want to be in the cold, right? You have to eat. You have to feed. You have to give your children clothes. You have to make sure that everything around the home is okay. Like, these are basics. So losing money is not one of those things. It's just spending on essentials. You're not losing money. Okay. So if you're investing for the long term, you're not losing money. People feel like, oh, because it's coming out from their account, this money that I'm saving, when is this money going to yield fruit? You are not losing money. It will yield fruit at the right time. It is for long term, and that's why it's long term. That is not losing money we're talking about here. And the next thing is building an emergency fund. So a lot of people, like, we have a lot of things happen to us, right? So if you're setting out, let's say $100 every month, $500, and you're building an emergency fund, you are not losing money by building that money, by putting together that money. Because when that money comes in handy, you'll be very grateful that you had that money. So that is not part of losing money, just in case you were wondering, that that's part of it. And then the last thing, saving for your children's future. There's no amount you save for your kids' future that is losing money, because you would reap the fruits in due time, right? So you're thinking about losing money. If you feel like all these basic things you're doing, you're losing money, that is not losing money. So I just want to make sure that we are very clear on that. So how do people actually lose money? And this is really a good part of what we're here for, right? How do people lose money? And what are the 5 biggest money leaks that actually happen? That most of the time we don't even know they happen. So number one, you have the high interest debt. So high interest debt, a lot of us do not really check to see, okay, how much are we actually living on our credit cards? There are some people that just do it randomly. It's very important that credit card debt is high interest. And it's not just credit card. There are quite a number of other debts that are credit card. It depends on what the person went to the bank to get, right? You can get a personal loan that is maybe 10%, of course, depending on the bank or wherever you got the loan from, right? So the key thing is high interest debt is one of the ways that people lose money. And another thing is taxes. So taxes, all the different registered accounts, your TFSA, RRSP, FHSA, all of them. Lack of knowledge is part of the reasons why people don't really use these accounts. Like, who wants to pay more taxes? That should be the question. So definitely nobody wants to pay taxes, but if you're not using these accounts, you're literally leaving money on the table. Or is it lifestyle inflation? Like, you get a salary raise and then it's time to shop. But the truth is, there are still people that when they have more money, let's say from a side business or more money from anywhere else, or maybe an increase in their income, they tend to spend more. So they may start to look at, oh, maybe I need a bigger house. Oh, maybe I need to change my car. I need to change my phone, like all these things. Forgetting the fact that your 5,000 last year is different from, it is not the same value as your 5,000 this year, right? So if you're not taking cognizance of the fact that inflation has happened and you have literally lost money even without doing nothing, and removing that extra, let's say 2% or 3%, let's be very conservative, 2%, 3% that has already lost value, and then you're still on top of that going to spend more money, then you're actually spending way more. And then another way that people actually lose money is through hidden fees. Some of us, and when I came out, this also happened to me. I came here, I didn't know a lot of things. I didn't know that there were banks that you don't pay fees on, right? Some people just come in and you don't know, and honestly, you don't know, right? But that's why we're here. That's why we're here to learn, because basically there are definitely some banks that actually would not charge you those fees. And it's very important that if you're someone that really wants to not lose money, then you need to pay attention to that. Okay, and then the next one is no income protection. So for a lot of people don't actually really understand that there is an impact when you don't have protection over your income, right? And it could go sideways, it could go different ways. Anything could happen to your income. It could be like a job loss, it could be like injury, anything at all. And when that happens, it affects your income directly or indirectly. It affects your ability to save. It affects everything else. You'll find out that your savings is going to get drained because you're probably using your savings to back up the income that is lost. And all of that could actually have been salvaged if things were done right. Okay, so this is just a quick snapshot of how people actually lose money. And then you ask me, okay, well, we have heard about losing money. Oh yeah, what's the next thing? So what are the practical steps to stop losing money? And the first on the list is to actually track and cut your spending leaks. I need to still explain this, but let's keep going. Tracking and cutting your spending leaks. There are a lot of leaks that, honestly, if you and I open our bank accounts, you will see some things that you wouldn't have been seeing. You will see some things that you didn't expect that you actually see in your account. So it's important that we track and cut any spending leaks. And then also eliminating any high interest debt. We'll talk about this in more detail. Building emergency funds, maximizing any tax sheltered accounts, and then protecting your income. These are practical steps. So I'm going to break them down one by one so that we have a better idea of what exactly these look like. So the first one, tracking and cutting spending leaks. So this is just basically about reviewing spending. It's very important that we do this because the truth is, when you don't check, you would see that you're actually losing. And honestly, for me, there was a time I checked my account. I actually saw $700 and something they debited me. And of course, I had to raise a dispute and all of that, and I got my money back. But the key thing is, if I didn't check, that is how that money would have gone. So it's important that you're checking, you're identifying what you're spending on, what you're wasting on, what are the real needs you have, and what you should actually focus less on. The other thing you can do is to cancel any unused subscriptions. And for those that use Apple, Apple has a very wonderful way of making you subscribe to things. You'll be downloading an app, they'll tell you, oh, get the free trial for 3 days or 5 days or whatever. And then after the 5 days, they start debiting you for whatever the amount. And we'll say, okay, let's just get the free trial. Maybe you have something important to do. You get the free trial, and then you forget to actually cancel the subscription. And then they'll not take their money. And of course, if you don't check, then you don't even know that the money has left, right? So it's important that you check any unused subscriptions, anything you're not using, all the Netflix, all the gym memberships. Those of us that will pay for gym will not show up. Remove them if you don't need to. I mean, if you need to, remove them if you're not using them, right? Any streaming services, basically anything you're not using, just cut them out. Because it will shock you how as little as $20 a month translates into $120 in a year and all of that. And all of them, imagine $20 in 5 different places. Or let's say $120, $110 here, right? All of those can actually make a very good difference in your account. And the next thing, negotiating your phone bills. This one, if you're not careful in this Canada, they will cut your neck with phone bills, internet. Recently, my phone bill was $50 every month. I was supposed to be paying $50. And I called them and I said, no, I'm not paying. And they eventually reduced it to $25. And in my mind, I'm like, okay, so if I didn't call them, they would not reduce that. So how many of us actually have, when last did we even check how much we are paying? Don't we just pay and let the money just be going? Because of course it's on PAD, it's on what they call it, pre-authorized debit. So they'll just be taking your money and you won't even know how much. It's very important that you're checking, you're asking for discounts, you're checking for any better plans, everything you need to do to make sure that you get a better pricing. And then 48-hour rule for non-essentials. Anything that you're buying, for example, you go to Superstore, you went to shop for groceries, and then you saw one beautiful bag, and you look at that bag, you tell yourself, this bag, let me just take it. I should spoil myself small. The truth is you didn't budget for that, right? And if you don't take it that day, it may or may not kill you, depending on how important it is to you. But the truth is, if you actually decide, okay, you know what? Yes, I've seen this thing. It's still in the store, right? I can come back for it in the next 2 days. And then you give yourself that 48-hour break and you ask yourself, okay, do I really need this? Do I really need this? And if you don't need it, your guess is as good as mine. You don't go back for it, and that way you've saved yourself money. So it's very important that you don't just, especially when you go to all these stores, they have a very wonderful way of displaying the kind of things that you can easily say, oh, this thing, oh, I forgot, oh, this thing, I should add it to my list. Especially on your way out, they always do that. So this is just to remind you that please give yourself that 48-hour rule, 2 days if possible, and ask yourself, do I really need that? And if you don't really need that, then there's no point, right? And then the next one is to reduce everyday convenience spending. All those Starbucks today, Tim Hortons tomorrow, every day. And I just want to grab my coffee. Why people do that tomorrow? You go there, go and take coffee. Every day you are going, every day you're spending $5 here, $10 here, small like that. Or the kids are always stopping you. McDonald's, you take them there. All these little things add up. It may not seem like a lot, but by the time you put everything together, you'll find that there are a lot. But the next question you ask me is, okay, so should we now not enjoy ourselves? Please, you should enjoy yourself because life is short, but enjoy yourself in moderation. And moderation meaning create a budget and tell yourself, you see, every month, I don't want to spend more than $30. This is just an example. You can use anything that works for you. I don't want to spend more than $30 to buy those kind of things, conveniences, all those things here and there. And once you've gotten to that cap, it is done. No, let's wait for next month. That is a way that you can actually help yourself. So it's not just going with the flow. Sometimes planning where your money should go is very important so that you don't just keep spending. You want to make sure that you're also keeping track of how and where your money is going to. The next one is eliminating high interest debt. I'll touch on this very quickly. So this one has to do with paying off your credit cards. For most of us, anyone that has credit card debt, like honestly, if you have that money, because I from my little interactions with most of my clients, they have the money to pay. They will just be investing their money and still keeping balance. Please, if you have the money to pay for your credit cards, pay it down. Because the truth is, if your investment is giving you, let's say 10%, and your credit card is charging you, say 18%, let me be conservative, right? Between 18% and 10%, it's a no-brainer. What are you keeping money in investment for? Pay down on your credit card and then continue investing. So take advantage of any opportunities where you have to, you're being offered to actually consolidate these credit cards. Because what some banks do now is they want you to bring all your credit card balances to them, especially if you have a very good credit. They give you offers and tell you, okay, why don't you move this balance to us? And then you move it to them at a lower rate. That's also another thing you can do. And this is for someone who doesn't have money, right? You don't have the money to pay down. You can merge everything in one at a lower rate and make a conscious effort to build a debt payoff timeline. You don't have to leave it for too long, because trust me, keeping your credit card, it can really go a long way in pinching you in the long run. Like, credit card is the highest interest rate you ever pay. And again, it's not just credit card. You could have taken maybe like a personal loan. You could have taken a car loan. Well, but the truth is credit card is usually more, because I don't think you have car loans of more than 10%, right? Credit card is still way higher. And the reason is because most people feel like credit card is very easy to access. You just bring out your card from your wallet and that is it. The money has gone. So it's very important that you set a clear target. You tell yourself, okay, I want to pay off. And then you try and pay that off. Celebrate any small wins you have and continue to build that discipline, continue to build that ability to make sure that you're clearing these things off, so that all the money you're working hard for is not just going down the drain. Okay, and if you need to freeze your cards as well, you can freeze it. If you know that you're really bad with spending money, you can freeze that as well. Okay, so the next thing we talked about is building an emergency fund. And an emergency fund is very important, right? You and I already know that anything can happen. Life happens, right? The kids could need braces. A child could be sick. Your parents could come to visit, and maybe you don't have insurance for them and they fall sick, right? You need to pay for that out of pocket. So do you have, are you like keeping any emergency funds that you can easily reach? And the key thing is, it doesn't have to be big. A lot of people set very huge targets and say, oh, I want 20K. And because you want 20,000, you now would not, it feels so overwhelming for you. But the thing is, just start small. Even if it's a small 1,000 you want to start with, to continually build the emergency fund, you can start with that. And anything else you can do that would help you to just keep setting aside $50, $100 per your paycheck. You just keep automating it and reducing it, sending the money there, so that you can actually have that money to spend much later when you need when the need arises. And again, you need to keep that money somewhere. You need to keep that money somewhere, and you can keep it in a savings account, right? The best place to keep it is actually in a high interest savings account. And high interest meaning that they're actually paying you something on it, right? So that your money is not just sitting down there. You want to also be earning money passively, right? When I came to Canada, I didn't know about high interest savings accounts. Man, I made a lot of mistakes too, but anyway, we keep learning and we keep sharing as we go, right? So please make use of your TFSA account as well. You can also save in that account, but the key thing is ensuring that that money is working for you. Wherever it is, make sure you have that emergency fund working for you, okay? And then the next one is, okay, maximizing the tax sheltered accounts. And this is where a lot of people like to play ignorance. And again, you won't blame them. They don't know, right? I didn't know when I came. So yeah. So I'll start with the TFSA, and let me know, give me a thumbs up if you don't have a TFSA account. Like, every Canadian, let me not say Canadian, everyone who is a Canadian resident should have a TFSA account. There's no excuse whatsoever on planet Earth that would make you not have a TFSA account. And the reason is simple. The TFSA account is the only registered account you have in Canada that you can put money and you don't get taxed. So you see all those savings of what's it called? You're paying stocks, you're putting money in stocks, you're buying ETFs, you're doing everything else. You are going to pay taxes on that account, on wherever the money is. It's not free. You pay taxes. But you see this TFSA account, this is an account that you do not pay taxes on. You don't pay taxes when you put in the money. You don't pay taxes when you're withdrawing the money. When your money grows, you do not pay taxes. So I don't know why some people don't have tax-free savings accounts. Please, if you don't have one, ensure you open one today. And you can open in the banks, you can open with a financial advisor, you can open with me, or you can even open in all these Wealth Simple, Questrade. There are loads of places you can actually open this account. So please, you have no excuse. The key thing is not just opening the account, make sure that the money is invested and working for you. And also know your limits, right? Your TFSA for this year, I believe, is 7,000 limits. And your limit accumulates depending on how long you've been in Canada. For RRSP is a bit tricky. So this one, it's tax deferred. And basically, what happens is you pay the taxes, but you pay at a later date. And usually, I would recommend your your RRSP for someone who earns a lot of income. So if your income is basically 90K and above, it's a good account to actually open to reduce your taxes. Okay, but reduce your taxes, get the tax refunds, but make sure that you're using those tax refunds very well. So you're using those tax refunds to apply it to any debt if you have, or you're adding it to your TFSA, or you're boosting your emergency fund. Because guess what? You see that refund you're getting. CRA is coming for you when you're withdrawing that money. This one is not tax-free. And another thing about this RRSP is the money you are putting, plus the money you are making on that money, CRA is collecting their cuts. So it's not like your TFSA where even if you make money on it, it's all yours. This one, the money you are making on it, the money you put there, everything is taxed when you are withdrawing. But the goal is a lot of people, depending on when you withdraw, which is usually when you're older, you probably will be in a lower tax bracket and it will favor you then. But again, who wants to be poor when they're older? I don't know about you, but me, I want to be rich when I'm older. Anyway, that one, it depends on what you want. Then FHSA is for first-time home buyers. If you have a plan to buy a house in Canada and you haven't and you don't have an FHSA account, it's a cool account to actually save money for a first home. And basically, it does have a limit. It has a limit of 40,000, and you can pay up to 8,000 per year. So, but again, even if you don't buy the house, you can transfer that money to an RRSP. But in either way, at the end, last, there's still tax on that account. You have your RESP. Those that have kids, please, if you have a child and you don't have RESP, it's a no-brainer. You're literally losing a lot of money because you only need as little as $25 to open an RESP. And especially when you just come into Canada, right? You come into Canada, you're low income, of course, before you start earning all the plenty money, right? You're low income, and just putting that $25, the government pays you, first of all, $500 for CLB, Canada Learning Bond. That's a grant. It's free. It's for the child, for their learning, right? They pay you that $500, and every other year, as long as you're within the low income bracket, the government continues to pay you $100 each. So that's for CLB. And this one, you don't need to have contributed anything. Merely just opening that account gives you that option to get that free grant. So please, if you don't have an RESP account, please open one, and I can help you open one. You can open one in the bank. You can open one in Wealth Simple or any of those. But the key thing is make sure you open it. Okay. And then you have the CESG. So this one is free money. But again, this one is CESG, which is Canada Education Savings Grant. This one is basically for people that contribute. So as you contribute, the government matches up to 20%. So when it matches up to that 20%, no matter how much you're contributing, as long as it gets to if you contribute up to 2005, the government continues to match it to the max. That's 20%. So it's another free money. Do not leave it on the table. You can actually make automations from your account to that account so that you don't forget to do those transfers. Okay. So please maximize these accounts. Make sure you're not leaving any money on the table. Okay. And then this last one, income protection. So, and this one is one that a lot of people do not really take into cognizance. So we have three basic needs, you and I: food, clothing, shelter. These are basic needs, right? But guess what? There's only one variable that affects these three. And what is this variable? Your income, right? Your income decides on the kind of home you buy or you rent. Your income decides on the kind of clothes you purchase. Your income decides on the kind of place you live or the shelter and all of that, like your food. And everything literally is your income. So if you now stopped work, so this is you. If you now stop working, what's going to happen? Someone needs to ensure that that income still continues to flow for this, right? For your basic needs. I'm not even talking about the jara on top of the basic needs, right? So what is that extra thing that actually comes into place? It's insurance. Insurance, it could be life insurance, it could be disability insurance, it could be critical illness. And the goal is simple. Income has stopped. There's no money, right? So what happens? The backup plan kicks in. And depending on the reason why, So for example, for life insurance, the first reason you probably will be looking at is, God forbid, something happens to the person who's bringing money, right? If something happens to that person, the insurance pays out. But again, the key thing is to find that number. Find the number, that's the exact number that will cover your financial needs. And this is not a blanket thing. This is something that you will have to sit down and actually look at your assets and liabilities, run the numbers with a finance person, and the person can give you that amount that you need. Okay, and then you have the loss of income insurance. And loss of income, this one is disability. This one happens, like, it occurs when you lose your income. It could be loss of income. It could be loss of income due to injury. A lot of people say, oh, we have it at my work. I have it in my workplace. And that's fine. But have you reviewed it lately? Do you really know what you have? Like, most of the time, what your work will offer you will be way less. And trust me, if your income is covering mortgage, covering some heavy things, you don't want to leave that income to chance, because if for any reason you're unable to work, everything stalls, right? So it's important to check, do I even have this? And is my income covered? And the last one is critical illness. So critical illness, it's important. This one is very important because 1 in every 2 Canadians get diagnosed with cancer in their lifetime. And this is no joke. This is statistics I found online, right? And it's not just cancer. There's heart attack, there's a stroke, there's all sorts. And usually critical illness covers this. Critical illness pays you out a lump sum when one gets a diagnosis, right? And yes, we don't want it. God forbid, I don't want anybody to have that, but it happens. You and I know a few people that have had these illnesses, and somehow the critical illness really was very helpful. Because again, trust me, the critical illness is just the critical illness insurance is a payout. Like, it's money that gets paid out to one if one gets diagnosed. So for example, if you have like a coverage of 30K and God forbid, you just get a diagnosis, that money is paid out to you tax-free, lump sum. And nobody's asking you what you're doing with that money. Nobody's asking you whether you're buying drugs, whether you're looking after your family. It's tax-free. So why wouldn't one cover their income with that? So it's important that you have all of this, because the truth is, you don't have these, you are leaking, money is leaking somewhere, somehow, some way. It may seem like, oh, these things are just backup and all of that, but trust me, it's when those things happen, which we don't pray for, but it does happen. When they happen, that's when everything kind of is put into perspective, and you're like, oh my God, thank God I actually did that. Okay, so okay, we're just about to wrap up now. So a quick reality check for you and I. If your income stops tomorrow, how long will savings last? Is it 1 month, 3 months, 6 months? And what steps are you willing to take today to actually design that kind of life you and I want? Even if you don't take out anything from this, just pick one thing. Pick one thing, whether it's the protection of income, whether it's the cutting your leaks, money leaks, maximizing any tax investments accounts, whatever it is. Just pick one thing and tell yourself, you see this thing, I'm going to make sure I do it. Or like, just do something, but don't just leave everything to chance. Okay, and in conclusion, cut the leaks, build your cushion, and use the right accounts. Like, these are little ways money is just going away, and you don't want that to continue to happen, because guess what? By the time you accumulate everything, you'll find out that that money is very critical, and it's actually mixed. Imagine you had 250 in different places, right? Of course, the yearly amount, right? You don't want to leave that money to chance, and protect your income, protect your engine that actually makes all these things happen. Protect your life, protect the fact that you need your health. Without your health, you cannot make the money. Without the money, you cannot look after, you cannot even do the basic things, not even the JARA. So, and the truth is, again, you're not just earning money, you're building a legacy. Okay, so I have spoken a lot. Thank you very much. Thank you. Feel free to connect with me